Dividend investing has two camps. The first focuses on dividend-growing stocks. These firms may not pay a high dividend, but they've continuously raised dividends. Second, high-yield stocks. These firms pay a high per-share dividend. Divide a stock's annual dividend by its share price to estimate its yield. A $100 firm that paid $5 in dividends last year will yield 5%. The yield is based on past dividends and is affected by share price fluctuations. Investors can still use dividend yields to find high-income firms. Here are the 10 best dividend stocks to invest in now. Number 10. Enbridge Corporation. It is one of the most important oil and gas businesses in both the United States and Canada. It trades in both Canadian and U.S. currencies because it is a stock that is listed on the stock markets in both the United States and Canada. The business is broken down into the following departments or divisions: liquid pipelines, gas distribution and storage, gas transmission and midstream, renewable power generation, and energy services. After suffering losses during the COVID-19 market meltdown in March 2020, the company has made a significant recovery and is expected to beat the market in 2021 and 2022 as a result of rising commodity prices. Number 9. BCE Corporation. Another company whose stock is traded on markets in both the United States and Canada is this corporation. The corporation, which was once known as Bell, delivers cellular, wireline, and media services to clients all around the country of Canada. Oligopoly is a highly prevalent business model in Canada's telecommunications industry, which is characterized by the dominance of just 3 significant corporations. As a direct consequence of this, it has had consistent growth over the past several decades as a result of the expansion of its business offerings and the acquisition of smaller competitors. In particular, it has maintained an impressively lengthy string of dividend payments in a row. Number 8. Philip Morris International Corporation. Investors who are worried about environmental, social, and governance performance are encouraged to pass on this company. However, investors who are focused on income may wish to remain invested. Since then, it has expanded into smoke-free nicotine products, including capitalizing on the new trend of using vaporizers. It is one of the largest tobacco manufacturing and sales corporations in the world. This shows a conscious decision inside it to cease the sale of cigarettes in light of the continuing decline in demand for cigarettes around the world. The corporation, on the other hand, is known for its robust dividend payments. Number 7. Sturm Ruger & Company. Given that this stock is associated with the sale of firearms, ethical, socially responsible, and sustainable investors would want to steer clear of it. It is a very well-known gun manufacturer in the United States. The company's lineups of rimfire rifles and semi-automatic pistols continue to be extremely well-liked among target shooters as well as recreational shooters. Ruger, like many other makers of weapons, does not sell its goods directly to end users, but rather distributes them through a network of wholesale outlets that have been granted appropriate authorization by the government. Number 6. Best Buy. In spite of competition from online shops such as Amazon, Best Buy has managed to maintain its position as a well-liked physical location for purchasing consumer electronics. At its locations all around the country, customers continue to buy physical game consoles, cell phones, smart TVs, and personal computers, in addition to the hardware that supports these products. In order to maintain its position as a market leader, the store has invested heavily in growing its e-commerce capabilities. Because it operates more than 1,300 stores across the country, its presence in the market for electronic goods is still significant. Number 5. The Blackstone Group. This stock is frequently confused with the much larger and more well-known BlackRock, but the two companies are quite distinct from one another. BX is a financial firm with its headquarters in New York City that focuses primarily on providing advisory services for merger and acquisition deals. The organization is also involved in private equity, real estate, and hedge fund investments, in addition to providing boutique investment banking services such as fund replacement, restructuring, and even initial public offerings. It received considerable tailwinds during the low interest rate environment that existed from 2018 to 2021, which assisted in them sourcing and closing many purchases. Number 4. Canadian Imperial Bank of Commerce. It is one of the big 6 banks in Canada, and as such, it competes in an industry that is highly regulated, oligopolistic, and has an unlimited customer base. It is one of those Canadian financial institutions that has existed for decades and currently employs more than 45,000 people across the country. Retail, capital markets, investment banking, and commercial banking are some of the business areas that this corporation serves. It was able to emerge largely unscathed from the global financial crisis that occurred between 2007 and 2009 as a result of its robust balance sheet and sound risk management. It is another stock that is dual listed on US and Canadian markets, and it gives US investors a dividend that is higher than that offered by the majority of US bank companies. Number 3. The Universal Corporation. Since it is another tobacco company, environmental, social, and governance investors are encouraged to avoid investing in the company altogether. It is less significant as seen by its market value of only $1.3 billion. The company serves as a supplier of leaf tobacco ingredients to tobacco makers all over the world and operates on a business-to-business basis. The services of selecting, acquiring, processing, packing, storing, shipping, and financing are all included in its offering of services. In addition, its beta of 0.6 indicates that it is substantially less volatile than the market as a whole. Because of this, and the high dividend yield it offers, it may be a solid choice for conservative investing. Number 2. Triton International Limited. The international supply chains of Triton International Limited are essential to the maintenance of our standard of living. The products that we buy without giving any thought to their origins frequently experience arduous travels spanning the globe aboard ships for several months before they reach our shelves. Investing in it, a company that leases and trades intermodal freight container, is a fantastic way to put money into this vitally important infrastructure. Firms such as theirs are relied upon by transportation companies for the provision of freight containers. These containers are either leased or resold. In recent years, there has been a significant demand for its services, which has turned the company into a cash cow. Number 1. Lamar Advertising. Joe M. Coe and Charles W. Lamar laid the groundwork for what would become the Lamar Advertising Company in 1902. In 1908, in the city of Pensacola, Florida, Charles W. Lamar Sr. and Joe M. Coe agreed to end their 3-year collaboration by tossing a coin to decide how they would divide their assets. This was the year that the company became independent for the first time and adopted its current name. Both the Pensacola Opera House and the Pensacola Advertising Company, which had been established in order to advertise it, were going to be split between the two men. Charles W. Lamar was unsuccessful in his attempt to flip a coin and was consequently saddled with the less lucrative poster company, which he later rebranded as the Lamar Outdoor Advertising Company. There are many different types of firms that are publicly traded. These companies frequently choose to obtain cash through an initial public offering rather than by issuing debt. It is easy to overlook that some more traditional brick-and-mortar companies with sound business strategies choose to go public, as the public's attention is often focused on high-profile tech stocks. However, this is a mistake. One excellent illustration of this is the company Lamar Advertising, which leases out the space across the country that is used for advertisements on billboards, bus shelters, benches, and airport terminals. Demand for advertising space in physical locations is holding steady in spite of the growth of online shopping. As a direct consequence of this company has healthy cash flows and a respectable dividend yield. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.